get the recording going and turn you over to Steve. Hey, Steve. Hey, Andy. What's going on today?
Hello. Thanks, Scott. Hey, Andy.
Hey, Steve. Hey, Scott.
All right. Hear you very well, loud and clear. All right, everybody. Thanks for showing up for our Tuesday webinars. You know, we've got webinars at 5 o'clock Eastern, Monday, Tuesday, Wednesday, Thursday, with a little different crew each time, but this is the Tuesday webinar where we go over the trade of the week that was mailed out yesterday. It's kind of the focal point of the webinar, but we do touch on a lot of other things, including some functionality of the product, and kind of go over what even happened in the market today. Got a good little agenda for you today. I don't know if we'll go the full hour, but we'll be real close, but I think we've got some really good content for you. Before I move forward and say the disclaimer, just a quick reminder, I'm Steve Gomez. I'm user number 3 in the Trade Ideas system, been using it since 2002. My sidekick today, Andy, is user number 40 in the system, so we are the OG original beta testers, and we've been around this product really longer than anybody else has that I know of. And so happy to be here today again, kind of explaining how we use it and maybe give some great tips that people did not really fully understand. I'm happy to hear the polling that Scott does. That is kind of a trend that we're seeing. Usually half the people in the room don't quite have the product yet, but the others that do have the product seem to be gravitating towards the premium, which is great. So I dropped a bio of myself in the chat window, just a quick bio if you want to know who's talking at you here. And then we may drop some other things in there depending upon if somebody's looking for a scan or something that we might show. So back to our slide here, the disclaimer, making the attorneys happy, just reminding everybody that what you're listening to is not a solicitation for investment or trading advice. That should be done through your financial advisors, your series holders, brokers, etc. They're the ones that took all those fiduciary tests to make sure that they're on the up and up and they can manage money fairly. We, on the other hand, are a content provider, software as a service, and we've just got a really cool technology that just keeps getting better, and the word's getting out. I'll even show you a slide on that, but please do not construct this or construe this as any investment advice tailored to you in a personal fashion. This is a broad overview of a very cool technology. And this slide is always very important because, you know, we get a lot of feedback on a daily basis about the customer support that Trade Ideas offers. And we recognize that Trade Ideas is a pretty intense program. It's got a lot of functionality and it can go in many different directions depending upon who you are. So we really do pride ourselves on onboarding in the concierge and making sure people get the information they need, primarily through these webinars, the ones that I mentioned this week, Monday, Tuesday, Wednesday, Thursday, all occurring at 5 p.m. Eastern. You can see the different names in here. Monday is myself and Jamie. Today is myself and Andy. Tomorrow is Dan and Brad, focused on more Q&A stuff, probably more of the auto bot trading that's coming out with the interactive brokers. They'll be focusing more on that. And then lastly, on Thursday, the trading studio with Jamie and running sidekick to Andy, where he gives you a few of his trading axioms and ideas and how he likes to use the product. And then, of course, this big slide you're looking at here is the free trading room. If you're not in Barry Anderson's free live trading room, you should be, because we're hearing all the time that this is a wonderful environment for people to not only learn about the program, the technology, but there's a handful of really good traders in there that are constantly on the hot sectors, the hot stocks, and it's a free room. And, you know, I hear people paying pretty good chunks of money for, you know, a monthly subscription to a free trading room. And when people stumble across ours, they're like, wow, why was I even paying for this in the past? This is awesome. So that's another great way in which we can keep you guys up to speed. There's a technical support tab in there. A lot of times people will grab that technical support tab and say, hey, anybody know how I can find new highs or new lows pre-market or anything like that? You'll get a lot of feedback. You'll get a lot of support and answers from people in our wonderful community. And then lastly, the thing that really is not on here, but what is the biggest benefit of all, and I'm talking to you right now, the people who haven't subscribed yet and you're thinking about kicking the tires, keep this in mind. Scott's going to give you a promo code at the end of the webinar. It's going to save you 15% off to give a first month a try. And once you've done that, you can sign up for our free one-on-one hour of power session, where it's just you and us sharing screens, and we're devoted only to you and what you're looking for, to help you answer the questions you need and maybe give you a couple scans and a couple of directional ideas of how to use the program, because it is a very powerful program and can be used in many different ways. So that 1 hour of power is actually like a $99 value, because if you want to come back and do another hour, that is the fee for that. So my point is, if you're kicking the tires, it's a great way to just get a full immersion in the first 30 days using the promo code Scott has, and then taking advantage of a one-on-one session. And if after all of that, the one-on-one session, if you still think the product isn't for you, then great. You kicked the tires and you gave it a good assessment. But taking a look at this this chart here, I think we all agree that the people that are signing up are pretty much sticking around. They do like what we have to offer. Just a quick benchmark there. This is basically where AI Holly was introduced, and since then we've been ramping up with new subscribers in droves. We've been having to hire new people here at Trade Ideas as well to take on the increased customer service. But this chart really does tell it all. The people like the product, they love the product, the word's getting out, and I don't even think we're quite at the tipping point yet, as Dan Merkin likes to say. A quick visual on the AI performance. I'll get into it today. It was a little bit noisy, and we'll talk about that. But this particular graph is just going back to January 1st, 2017. The blue line is basically our SPY, and the green line is the total end-of-day aggregate points that have been generated by the AI. So basically, spider points roughly just under 15, and the AI points look like they're up here around 50 or so. So a good visual representation as we're only in early March, but once again, 2017 is basically showing what we try to give to people with the understanding what the AI is. It's not the golden goose that's going to take an average newbie from $0 to $100 million. That's insane for you to even think that. What the AI does is it gives us aggregated casino-type odds over the long run, and this is what this chart demonstrates. This is what a casino-type odd would look like over the course of time. Is the casino going to win and make money every single day? No. But over the most part, over the course of a particular course of action, the casino odds are going to distance themselves, and that's what we have with the AI, and this is very similar to what we had all of last year as well. Before we get into the agenda, I'm going to preface a slide that I pulled together. Today is March 7th, and this was yesterday, March 6th. I'm going to talk a little bit about how when we say the AI is kind of our canary in the coal mine, or our surfer out there in the middle of a storm, as we can watch and see how things are going for the statistical, unemotional, perfect robot. Well, what we had on our histogram here today, this was about over 2 hours of trading in the morning. And when I see days like this, it pretty much tells me it's just very noisy. The AI is not seeing things clearly. They're getting in, getting out quickly. There's not a lot of follow-through. Versus yesterday, a really nice start to the day back here with these 2 hours, and then just a continued movement into the close. So we would call this a statistically smooth, a good day, the kind of day where the AI is seeing things and things are working. But this ugly, ugly histogram here in the first 2 hours of the day should kind of give us caution and say, wow, this is a pretty statistically noisy day. The AI can't find a track like it does on the days when it really does find its groove. There was no groove to be found today, so I really wanted to highlight those two screenshots because when we talk about noisy, this is kind of what we're talking about, versus clean, all systems firing like they were doing yesterday. All right, today's agenda is going to be pretty simple. We're going to talk about the market recap like we always do. A couple of red flags are coming up, and I want to maybe share a couple of those thoughts with you. The AI recap, we kind of just touched on it there. It was a very noisy day, so we'll spend just a very little bit of time on that. The trade of the week this week is CYH. I've got some thoughts that actually didn't trigger until going into the close yesterday. And then I got kind of caught up in the downdraft of today, as well as the healthcare sector as well. We'll show that. I think you guys are going to like this. I've got a little demonstration that I worked on, finding breakouts before they happen. And I hear people a lot of times say, can you build me an alert to show me a stock before it breaks out? And that's a great question, The problem is we just can't guarantee that we can find you a stock that's going to tell you and alert you before it does break out. But what we can do is show you a couple different ways to configure the same type of new high scan using two different roundabout ways of trying to accomplish the same thing. And one of those ways actually happens to give us a little bit of an earlier look. Now, it's an earlier look. Does that guarantee it's going to predict? No. We say Trade Ideas does never predict what's going to happen, but it allows us to react in real time to very useful data that comes out. So that's going to make a lot more sense when we get to it. And then last week I felt bad. We did have chart requests up here, and we ran out of time, and a couple people I think had a couple charts they wanted to look at. And this can be an exercise that Andy and I enjoy doing. Additionally, it's really important, especially for newer traders, to start to learn how to read charts. I mean, I've seen some really asinine comments on Twitter about people who do nothing but follow fundamentals. That's great. If that works for them, that's great. But any trader that I know that's worth their salt, they're first and foremost a technician, and we always talk about looking left and looking at the charts. So what I want to do is maybe have you guys think of one and no more than two charts that you might want to have a second pair of eyes, myself and Andy, take a look at the end of our session. So don't type them in now. Just hold on to them, sit on them for the moment, and then when we ask for some chart recommendations, we can take a look at a couple charts and maybe give you guys some ideas of what we're seeing, and then hopefully that will, be a bit of an education to people who need to learn how to read charts. Because, again, you got to put the work in, guys. There is no golden goose. We talk a lot about putting in the work, putting our traders' hats on, and one of the easiest things we can do to learn how to, advance and get more understanding of what we're seeing is to look at the footprints in the sand and look at the charts and try and read and get some and glean some ideas from those charts. So that's our agenda for today. Let's go ahead and minimize this and just kind of get right into it. We'll start with looking at the SPY, which we normally do, and there's our famous orange lines that we've been drawing for weeks on end as the market continues to work its way through certain channels and levels. So yesterday I helped Jamie with his webinar, and we talked about this third little spinning top here, which came down and got really close to that ledge yesterday, but technically that ledge is yesterday's high. We still have not technically closed the gap, and I'm going to draw that for you right here. It's essentially about 236.50, and I'm going to zoom in on the 15-minute. So this seems to be what the market's looking for. This was the inaugural address that Trump made, got everybody excited, but then, as this market loves to do, it's 3 steps forward, 2.5 steps back. So this is the big line in the sand we're watching here. It's 236.50. Let's take a look at the 15-minute chart so you can get a little better idea of what I was seeing and how we draw gap fills. So there's the orange line that basically came in. For the most part, this was the close back here on February 28th, it looks like. Then we had the giant gap up. It's easier to see when we use a 15-minute chart that we technically have not quite filled this gap yet. Yeah, we filled this little level here of a level of support. We may have filled that level right there, but gaps are gaps until they're filled. And essentially 236.50 is where the price action went out this particular day. So keeping an eye on the daily chart again, I still feel like this is going to be a level we really have to protect. So scenarios, what happens if we open up tomorrow, the selling comes in, we maybe threaten it a little bit, and we bounce back up off that and we close well off of that orange line tomorrow. That would be scenario number one. That would be what the bulls want to see for sure. Scenario number two might not be as comforting to the bulls. Scenario number two, we could fill this gap and decide that maybe we don't want to bounce and maybe it's time for this market to take a breather. There's one thing that happened today that made me think that we could be close to that. We've talked a lot about the way this market seems to find its afternoon buyers and create wicks to the downside. Well, today, the afternoon buyer did not show up. We had an afternoon seller. Haven't seen that in a while, so when I see something that I haven't seen in a while, kind of raises a few red flags and makes me wonder, okay, is this just still us trying to get back and fill this gap? It very well could be, but I think the real test, as I said, is going to come is when this orange line at 236.50 is tested. where's the closing price going to be? Are we going to bounce back up and close above it, which would be a victory for the bulls? Or if not, we are sinking right back into a prior trading range, and then all bets can be off and things can start to get sloppy. And let's go to the cues, because again, the cues can demonstrate. I just want to remind you guys, there's an old saying, the stock markets and stock action, price action, they take the staircase up and they take the elevator down. So if some of you newer traders haven't been around, some of you grizzled traders have seen it, you can take 3 or 4 months of stair steps up like this, and you can give back a good half of it in 2 days, a couple of big red candles. And that, typically, I'm not predicting it, but when price gets overextended and it comes time for the price to breathe, it's not an orderly sell-off. Fear is stronger than greed by 10 times over, and at any time, be prepared for a quick elevator down day of 1 or 2 days down. That could be the sell-off that people are looking for, because what we've had recently, these are not considered sell-offs. These are just little tiny little breathers. Looking at the cues, they actually got a little bit closer to filling their gap, essentially, but not quite. They still have a little bit of work to do. Diamonds have not filled their gap, so essentially the Dow Jones right now, the industrials are still basically showing us that they are the strongest of the sectors, because they've still got a nice little window here above closing that gap, which I'll just go ahead and mark that up for purposes. And then the downside is what we've been talking about lately. This IWM, the Russell 2000 ETF, is just a mess. Everything else has been able to break out of its ranges, move higher, move to a new range, but this IWM small cap stuff is just a mess. And so this is caution flag number 2. While everything else is still pulling and backing and filling its gap above its breakout ranges, IWM has fallen back down inside no man's land again here and is really showing us nothing. I was kind of hoping back here on this day that maybe the IWM would break out and move higher, which could have continued to give the general market a nicer all tides lift all boats kind of a broad-based rally. But now we've got the small caps not acting in concert with what we've got in the other ones. And one last thing I did want to say on the cues, this is the first time we've seen this. It's an upside wick. We've seen tons of end of day buy the wick, buy the end of day, buy the end of day, looking at my cursor, buy the end of, so tons of downside wicks. A couple dojis. But all of a sudden, we got this attempt to rally today in the cues, and it got squashed. So this also is a little bit of a red flag I'm trying to throw up with you guys, and see if this means anything. But I think what I'm going to be watching the most is what the spiders do if they can come back and test this 136.50 range and where they close in relation to that range. If they close back down inside this range in no man's land, then we got to throw up the caution flags again. All right, anything you want to add, Andy?
Well, you covered it very thoroughly. I will add, keep an eye on the IWM. I can remember, maybe a couple of years ago, that the market cannot power higher if you have a major index like the IWMs. If it starts to break, if it starts to bleed down, it's got a trend line. I'm not going to ask you. You can kind of see it with your eye there. That probably goes to around 135, a little above that. That it probably would need to hold.
From here to here?
No, starting at the low, starting at around December 1st. There you go. If you were to draw it there.
Let's do it.
Okay. Yeah, let's go ahead and draw a trend line. I think that would need to hold, because if you start seeing a major index, even though it is a small cap one, but still you start seeing it dropping off, majorly, I think you got to definitely keep an eye on that. So that's an area I would like to see hold on the IWM.
Mm-hmm.
But other than that, yeah, it could be that the major, the Qs, the spiders, and the Dow, it may eventually lift this up, but it's had 3 chances now, and it could not break out of that range, and finally kind of has given up here the last week. So I think it's going down maybe the overall market. Yeah.
I'm not trying to be doom and gloomer, but you and I have been around long enough, Andy, to see the stair steps up and the elevator down. What takes 45, 60 days can be erased. Half of that can be erased in 2 days. Not predicting it. I'm just saying be aware of it. Be aware of it. It can happen, especially when we get stocks.
Well, especially when you've had a
Mm-hmm.
when you've had a move like this since the election results, it's be patient, especially if you're swing trading. Let the prices come to you. Don't be in any hurry, because once we finally do break some sort of trend, it could get nasty in a hurry. So,
Okay.
but anyway, I think you covered it pretty well.
All right, so let's go to Holly today. Not a whole lot to cover because I think I really tried to make my point with that histogram this morning. Here was the morning histogram that we had in that screenshot, and then the rest of the day just kind of bled off. So compared to yesterday, with a nice strong start and a nice slow trend, those are the days I think we get more excited about, giving a bit more credence and confidence to some of the Holly calls. But this histogram, when it becomes noisy like this, there are going to be days when the market is just not there. For instance, look what the Qs did today. The Qs had a really nice ramp up to highs, took out yesterday's highs, and then a complete reversal back down to lows. That's noise. There's a lot of noise there, and it doesn't really allow for a lot of broad-based holding into the end of the day. So it was a lot of quick hits, a couple quick misses, but the takeaway here is the noisiness of that histogram. Keep an eye on that. It was nothing like it was yesterday, and every day is not going to be obviously a green day, so we have to treat her like a canary in the coal mine, and there is definitely some struggle today. So please keep that in mind on the Holly. And then if we look at the end of day positions, it just kind of tells the same story. The risk on, there was so much noise, again, back with the Qs going green and then back to negative red, closing on lows. There was really no ability for any decent follow through today. So, the biggest winner of Holly was 20 cents. The biggest loser was 29 cents. Just kind of a day for the books. Nothing really special. If there's anything else you want to add on the AI today other than the noisiness, chime on in.
Oh, no, you covered it. Yeah, you covered it earlier.
Okay.
So
before I forget, gosh, I just love it when I get these washout bounces, because it gives me an opportunity to kind of say what the market is full of these days. This is a wonderful opportunity to maybe keep an eye on tomorrow. If it can clear this level of 83.40, but look at what happens on the opening 15 minutes. This was the opening 15 minutes of the day, everybody, and humans do not trade like this. It's my job to remind you that humans do not crash the stock all the way down and then buy it all the way back. Algorithms that seem to have a really good understanding of where stop orders are always find a way to do this in the first 15 minutes of the day. So when I see a flash crash and a flash dash reversal in a 15-minute period, I usually like to keep an eye on those. I'll probably go in right here and create a price alert just above today's highs, call it a washout bounce, because once again, my theory, my feeling on this is that we've got a lot of sideways action. The stock may be ready to move higher, but stocks have a funny way of doing a head fake first, where the stops get run out before a move. So when I see an intense amount of selling, look at that volume, and then a complete reversal. So basically we went from 83.11 down to 81.12. Pretty good drop and reversal in 15 minutes. Humans don't trade like that. But the point is, algorithms do, and when that happens, it seems to mitigate the risk a lot of times on a daily chart, where I can feel a lot more comfortable maybe sitting in a swing trade for 2 or 3 days once that risk has knocked everybody else out. So I didn't want to be remiss without pulling that one up. This one, WLTW, not as much I don't like, because it did it a little bit slower. It took about an hour or 45 minutes on the open, then traded back. So not really the intraday action that I like, so I kind of discard that one. And not to mention, it didn't really close on highs as well either. So I imprint more on the stuff that looks like this, that happens all in the first 15 minutes. It has all the fingerprints and hallmarks of ETF algorithms getting into a negative feedback loop and chasing down people's stop orders. Because if you do put stop orders into your E-Trade, Ameritrade, Schwab accounts, pretty good chance they're selling you guys out, and they're not admitting it. But that's my conspiracy theory for the day. Okay, so next is the trade of the week, CYH. Again, this one showed up many times. We like to look for the trend change type of stocks that have been beaten up and looking for a new trend change. We like to find stocks that had earnings behind us. In this particular case, we had earnings behind us with this particular gap right here. You can see on my single stock window, negative 10, which means earnings was negative 10 days ago. So we like to also have the earnings behind us. What we also like to do is look for levels of pivots that might make sense for a short float squeeze. In this particular case, roughly 23% of the float of the stock is held short. Now, going sideways and kind of building higher lows here, the trigger was basically 980. It triggered yesterday, went about 10 cents. Really nice close, as a matter of fact. I had a lot of nice volume on the close as I was watching it yesterday, if we can go into it. Here's the volume on yesterday's close as it took out a high. But today, we got kind of in a downdraft of a noisy market, and also the XLV is your ETF for healthcare. A little bit of a weakness today in the healthcare sector ETF. But back to why we chose it, we like to find stocks that had earnings behind us. We like to find stocks, oops, let me go back to my daily. I like to find stocks that are hopefully changing the cycle from disposition and selling and capitulation to early accumulation and then accumulation again, because that's what stocks do. They cycle up and down. They're in favor, they're out of favor, and those are typically the types of stocks that we like to look at. Now, where are we on this? Well, we're right smack in the middle of the range. The green is the high end of the range of the trigger, which we poked our head out on good volume yesterday, but disappointingly so, a pretty good red candle today back into the range. What we are not going to allow to do, and we got to talk about risk management now, is this giant gap down here. You know, sometimes we have what's called a breakaway gap, and breakaway gaps are never filled. But if they're not a breakaway gap, sometimes they may have the opportunity to want to come back and be filled. So we don't know that until after the fact, so we're not going to stick around and let this gap be filled. Essentially, this is our range here, 845 up to the trigger of 980. So this is our range. This is what we're working with. If it breaks this 845, chances are it's going to just want to continue down and come down probably to this level right here. And if you want to hear me get, you know, really creative, hopefully we don't get stopped out of this trade, but if it does, this down here could be considered a secondary entry as it pulls back to the prior breakout, but let's hope that doesn't happen. Checking back with just a couple of others watchers, just kind of flagging sideways, hopefully moving and waiting for another move higher. TrueCar is a stock that was way back early in January, but it is continuing to move higher. I like this potential horseshoe on the daily chart that it's starting to give itself and create a big gap up after earnings and then a building of the base and now turning back up. So you can see I do have a red dotted line here above this level. If we get above this level, it could be a momentum play because TrueCar also has a large short float contingency. So just a little bit of hashing backwards on some of the recent trades of the week. And there we have it. Anything you want to add to the trade of the week or how we select it? Or there's one thing I do want to add, guys. Today's Tuesday, and I'm telling you right now, it's a big if. But if we do get some sell pressure this week that starts to get ugly, you're probably going to see a no trade of the week next week. We've done it 3 times last year when there was a significant downside volatility. There's no sense in trying to jump in front of a falling knife. We need stocks to reset up, reset and give us a better look. So that's always a possibility if we start to sell off. And I'm sorry, Andy, did you want to say anything about CYW or the trade of the week? Or the mute button that you just pressed?
Yeah, well, yeah, my dog was yapping in the background. But no, yeah, no, you pretty much covered it. I didn't like that action today either, but like you said, it's still right in the middle of the range. I like the way it's been holding that gap so far, so let's see what happens.
XLV may have been a portion of that today. We shall see. And, you know, here's the other thing we didn't even think about. I try not to get too hung up on fundamentals, but we did have DC kind of trial balloon float a new Obamacare repeal and replace. May have something to do with that little bit of weakness that we had in the XLV after a lovely run-up, but we shall see. We're not in the business of trying to figure out exactly why. We are in the business of managing our risk to make money on the upside and manage our risk when it's not working for us. So the 845 is going to be a very hard stop. We're not going to allow that CYH to travel any lower. All right. I think I know what I'm doing next, but let me just double check. trade of the week. Yeah. All right. Finding breakouts before they happen. And then we'll get to some chart requests. So what I did, and Mandy and I talked to a lot of people, and a lot of people say, hey, can you build me a scanner or an alert that's going to show me something before it breaks out? And we kind of laugh at that because they're asking for us to predict the future. And I can't predict the future. Andy can't predict the future. Ollie can't predict the future, and Trade IDs can't. But what we can do is get high-quality data in front of our eyes in very quick fashion to help us react and make the best decision possible. So what I'm going to do, guys, and it's going to touch on a few things that maybe a couple of you didn't know on how to configure something. I'm going to show you two different ways to kind of create the same alert, but one of them has the ability to give you maybe a little early warning system that some people are asking for. So let's go ahead and get right into it. I've got them saved down here, minimized. Let me bring them up. And what we're going to do is we're going to look to find two different ways to scan for a stock making a 10-day high. And one of these scans is going to pick up the high a little earlier than the other. And I want to break it down, and I want to show you why. And you might learn a few things on how to maybe do some homework or do some configuration, or some evening work using histories and trying to find where is the best settings. So let's first look at this one, 10-day new high. All right, we're going to go and configure, very basic, and it's going to give us a lot of returns because I don't have a lot of filters in here. So, but that's okay. We can always add more filters later. Let's take a look. What we've done. Oops, why does that show 20? It's supposed to be 10. Is it 20? Hang on a second.
I think it was.
I think it was. Was it 20 or 10? Let me go look at my other one. Because if that's the case, then I've mislabeled these things. Yep, 20-day high.
20. Yep.
Yeah. Let's start off by correctly labeling these. This one is close to 20-day high. Close and save. And this one is close to 20. This one is a new 20-day new high. There we go. Okay, now we're on the same page. So configure, there's a couple different ways to use our new high alert. If you leave this box blank, new high is going to be nothing more than an intraday high for you as stocks make new highs throughout the day. But what a lot of people like to do is look at the bigger picture and say, I'd like to know when something breaks out of a 10 or 20-day high, 50-day high, or even a 52-week high. So what we'll do is we'll use our alert here as the new high, and we're going to say 20 days. So what we just did is we qualified it to say this is not an intraday high. This alert is only going to pop up when something breaks through a 20-day high and continues to make highs throughout that day, of course. But it has to make a 20-day high for it to first trigger. So if we click OK on that, just go ahead and grab history. We get a lot of returns. Okay. Let's go over to the close to a 20-day high where we're going to try and maybe get an early warning system. Configure is basically the same. I didn't spend too much time, but the same configuration over here on the right is what I've got. Basically, relative volume of 1, trade 300,000 shares today, and average daily volume over the last 5 days is 300,000 shares. That's it. I've got no price alerts, no other volume filters, just trying to see how soon and quick I can get an alert on this scan before I get it on this scan using the same symbol. Okay, so what we've got is we've got both conditions are the same. However, on this one, we are using a new high, but we did not put 20 in here because we're not waiting for a 20-day high. This is the secret sauce right here. The position in range, and for those of you who are familiar, we have many position in ranges. We have position in a 60-minute range. We have position in today's range. We have position in yesterday's range. We have position in a 10-day, 20-day, 50-day range, 52-week range, position in all-time highs. So in any one of these cases, 0 always equals the low of that range, and 100 is always going to equal the high of that range. So what we've done here is added this filter to say, show us stocks, yes, that are making new highs, but this filter is giving us a little early warning system here, 95 percentile of a 20-day high. So we're just a few percentage ticks away from making a new 20-day high. So that's really the only difference between these two alerts. We're trying to find stocks that are making new highs, but in one case, it's an actual 20-day high confirmed over here, and on this case, it's an actual high, but it's confirmed to being just a few ticks away from maybe breaking out of the 20-day high. Now, we've got a lot of noise here. How do we make sense of this and figure out what exactly the value is of this alert versus this alert? So here's something I'm going to show you, and some of you may not have known this, and it's a real nice, it's a nice tool when you're doing homework and scanning and setting up configurations. What we're going to do is we're going to go to, let's go to this one first. We're going to go to configure, and we're going to go to symbol lists. As a lot of you know, we can create symbol lists like my ETF list or the IBD50s, or we can say exclude certain symbols from this list. But for some of you that didn't know, we have one down here called single symbol. So right now what I'm going to do is I'm going to enter a single symbol, which I already did my homework on. I happen to know it's JBL. And by clicking just JBL, now we are pointing this entire alert to only JBL. All right? So here's our real-time last alert of the day. Let's go ahead and pop in history on JBL. I want to keep that kind of low so we can see our chart. Let's do the same thing over here. Configure, we'll go to our symbol list, and let's focus in on one symbol and one symbol only, which is JBL. All right, there's real time. Let us go to history today. So now this is a much easier way to do your homework, is to just focus on one symbol. A lot of times people will write me and say, hey Steve, see this stock of Qualcomm. I want to know when Qualcomm broke out of this narrow range deal, how can I find a scan for that? Well, a lot of times this is the first method I'll go to, is trying to reverse engineer and just type in the symbol Qualcomm and see if I can get it to show up on scans rather than building scans and then sliding through looking for the symbol Qualcomm. So just a nice little hack for you guys using the single stock window. So let's get to the bottom of it here. Let's go to the bottom down here, JBL, and the bottom here of JBL. Well, this one, JBL, came out at 8:59 my time, Pacific time, which is just about noon. Let's double click it. Pay attention to this 15-minute chart right here. I'm circling, guys. There's our blue arrow, and there's our early warning on the 95 percentile of breaking out of a 20-day high. If I go here to the bottom of JBL on the confirmed 20-day high, here's our arrow up here. Let's do it again, before and after. So basically, JBL was a stock that was on its way to making a new 20-day high. Do we know it's going to make a new 20-day high? No, we don't. But we're getting an early warning system that it's probably thinking about it. And if we take a look at this daily chart here, chances are it was probably going to try and at least try and get up there and make an attempt to a new 20-day high. So there's example number one, showing you how we can use the position and range, once again configure, position and range using 95 percentile, because 0 is going to be a 20-day low, and 100 is going to be the 20-day high, which is right there. And so if we're saying show me stuff as it's just a few percentage points away from breaking out of a new 20-day high, that is going to be your early warning system, guys. There's no guarantee it's going through, but at least you got an earlier look. Let's do one more, and then we'll go on to the chart example. So if you guys want to start thinking about one, no more than two chart symbols, you can start typing those into the question box. And if you're short, let us know. If you're long, let us know. Or if you have any other color, let us know. And we'll see if we can give you guys some ideas. So one more example before I ditch this early warning system example. Let's try another. Symbol. Let's go to our single symbol. And on this one, I also noticed AAOI was showing up on both alerts on the 20-day high. Let's go to history. And let's go over here and plug in single stock symbol AAOI so we can do our homework. And there is our history. Great. Let's scroll to the bottom of the day. First alert. First alert on AAOI came out at 7:21 my time, roughly, at 53:60. Here's our arrow, 5360. Let me draw 5360. I'll just go ahead and draw that for you. All right. Then on our second area alert, the new confirmed 20-day high, we weren't getting alerts until 54. Oh, there's that high right there. So we can pretty much see on the 15-minute chart, that little margin right there is the difference between getting an early warning system and then waiting for the stock to actually break out through. Now, one last point of interest. If you're looking at these and deciding that maybe you want to take a nice 95 percentile on the 20-day position and range and get an early look, what's the one thing that I'm going to be staring at the entire time? This guy right here, 5-minute volume. Why? Because we are approaching a new 20-day high. That's a significant level. If I see 5-minute volume meandering at 27%, 30%, I might not be interested. But if I get an early warning look like AAOI, and I've got a little bit more time to think about it, and I'm watching my 5-minute volume percentage, and this thing's doing 300, 400%, that's what I want to see. That's telling me there's some interest behind this thing, and hopefully we can get up and through the Willy Wonka glass ceiling. AAOI also.
Very good stuff.
Go ahead.
Steve?
Yep.
Yeah, I just want to add something too. I use a lot of these position and range, filters, and what I like about this, you hear us talk about stocks and how they want to fulfill their destiny. If you go back to JBL, and when you see a stock like that, or even either one, but JBL is I think a better example because it has a definitely confirmed 50.
Actually, I think you and I were talking about AAOI earlier. Both of them. You can make a case for
either one. You can make a case for either one, but I think JBL gave you a little more lead time as far as the 52-week high. That's why I kind of wanted to focus on that. We see it breaking out of a range right there, and then the alert going off. And we always talk about how stocks have a tendency, or I do, but to fulfill their destiny. And I really think this is more pronounced since we have a lot of algorithmic trading and a lot of HFT, that they're looking at the same thing and they just seem like they run these things, to these levels, So a lot of times, I would buy a stock, just based on, that, hey, it's going to go there. I'm about 80% sure it's going to go to that level, so I'm going to jump in early. So there goes your head start, It's not always going to work, but I tell you, man, it seems like a lot more times than not it does. But
yeah, and as I figured, people are asking for the alerts. Here's what I'm going to do, guys. I'm going to share the one that gives you the close to the 20-day high. The other one is so easy to make. New high, pop a 20 in there, pop your filters, and off you go. This one's a little bit more nuanced. So let me go back to real time, and I will be happy to drop this in there. And there's a lot of things you guys could do with volume filters and such to slow down the amount of stocks that come through if you want a little slower type of alert. So I've highlighted, I've saved and shared, copy all. I'm going to drop this into the chat window, and there is the cloud link right there for those that care. All right. And yes, thank you, Andy, for reminding us always to be looking left on the daily chart to see the bigger picture. I don't know how people who don't look at charts do it. I really don't know how they do it. They must have lost a lot of money as money managers. Okay, so here we are. We got about 6, 7, 8 minutes. We can take a look at a couple. The first one that came through was Don asking about U.S. Steel. First thing I'll do is I'll just basically expand where we are on here so we can take a bigger look at that particular scan. I'm also going to have another little one open so I can get a secondary look on something else. You have any immediate thoughts on X?
Well, I'm a big trend guy. So if I could draw a line down there to the 1st of November.
Yes, I see what you're doing. I see what you're talking about.
You see what I'm saying? I don't like what I'm seeing here. I don't know if you're long or short, but for the long side, this thing, it looks like it may at least want to go down and test that 35. And as Steve draws a trend line,
Steve fumbles.
Yeah, it's tough to grab these things.
That's kind of what you were looking at, right?
Exactly what I was looking at. So let's see if it's
Ooh,
touching
yeah.
it right now, or
There you
yeah,
go.
there you go. So you have a nice trend right there. If it breaks that trend line and takes out that low at the end of last month, it could get pretty ugly, you know.
Here's
At
another
least
thing I see.
yeah, at least
I
the
see.
35. Yeah,
Yeah, I see this pivot level exactly right there.
exactly.
So I think 35 is your danger point. Not
Mm-hmm.
only that, X had about a 50% short the float many months ago, and they've been working it off. They're
Mm-hmm.
really down to 15%. So there's not much more of a short squeeze scenario left in X, in my opinion. But I fully agree with Andy on the trend line, and I see this as a pivot line right here. So 35 could be tested in the near future.
Yep.
Whether or not it holds, we don't know.
Yep.
All right, let me just grab my. Hang on a second, I lost my questions.
I can grab them for you if you want to stay on the chart.
I think I got them. There we go. Bam. Questions open. Okay.
Okay.
So
BS short.
BS. Hey, dang, I did it again. Hang on a second. Okay. I need to make a couple of sizing adjustments here so I can really use my screen. Okay. BS, and the gentleman said it was a short.
Short.
A short sell for Bill. Okay, let's take a look over here. Oops, I hit a comma somehow. Is it BS?
Mm-hmm.
Why is BS not coming up?
I don't know.
Are we missing something there? Because if this is a
maybe he put BA after that. Maybe BA. Yeah, he put BA after that. Okay.
Ah, Boeing.
Boeing.
Okay. Well, a quick look at the fundamentals. They've got earnings data is not in there, but wow, I mean, quite the trend. Here's a classic example of backing and filling that we don't want to see in some of our stocks if we have a gap. Here's a perfect example, but that's why I also said, I'll just go right back to it. If CYD does pull back to its gap, that's why this area here could at some point be an interesting entry, because that's exactly what happened here in BA. Really nice move higher. 3 days of pullback is nice, but I really think you just got to watch this level right here.
Remember, Steve, he's looking at it as a short.
Okay,
yeah.
Thank you for reminding me. What you really need is for this level to break. Today didn't really help that much, but we closed off highs, so that is good. Let's take a look at the intraday. Definitely closed off highs. I typically want to short weak stocks rather than trying to pick tops in stocks going straight up. So keep that in mind. You're trying to be a little tricky. You're thinking it's gone a long way. If I can nail it right, you might nail it once, but it might create a bad habit again for the next time. I would prefer to wait and maybe even create a price alert just like that right there and go short and then just call it a trend break. Yep. Pretty much right there at that 180.43, give or take a nickel or so. Watch it tomorrow. If it takes out tomorrow's highs, then I wouldn't like it. I would like to see some more hanging around here at this level for the most part.
Yeah. It's a very dangerous game. It really is. I know it's enticing. You look at that thing and where it's come from, where it came from, and you want to, you'd like to be in big tree fall hard and but I just that's a very dangerous game.
ATVI is a beauty. I wish it had more short float to maybe squeeze these people higher, but you've heard me talk about the horseshoe is a fractal type of pattern. It doesn't matter whether it's daily candles or 15-minute candles. The gap up, the sellers could not bring the price in. Here was the base. The base moved higher, and now we have taken out this prior high. This is a darn good-looking chart. I hope to God you get 3 or 4 more days of follow-through on that. It would be nice if it had more short float behind it. The earnings are behind us. Obviously, that was our earnings day. But this, not only is it a horseshoe, it's almost kind of like a cup and handle horseshoe. It's a really nice-looking chart, and looking left, not seeing a whole lot. So,
yep.
Well done.
And not only that, you talk about relative strength. Look, the market is pulling back right now, but this is still just pushing higher. So, yeah, that's very strong.
Well
now,
done.
I would not want it to come back. You don't want a pattern like that to fail. But
well, I'm using this area right here as kind of maybe it comes back and back and forth a little bit.
Right.
But this was for the most part a higher base camp being set right here, so we don't want to see that break.
No.
Okay. All right.
ENZ.
ENZ, all right. And we're long or short?
We didn't say, but
Didn't
it's
say.
all right. We can
This
give
one's
our.
just kind of in no man's land, sliding across, back and forth. I mean, we've got kind of a range for the most part. It looks like this kind of range right here, I would say. So you're kind of in the middle of the range, nothing really going on. Earnings are coming up in a few days. You got to be aware of that. We did have a nice 1, 2, 3, 4 days of green, probably going to give a little bit back. The market's 3 steps forward, 2 steps back. Nothing super compelling there, but unless you know something fundamentally that I don't, that's okay. We can do WUBA or TSN. Let me see which one I like better. I think I like WUBA better. So coming out of kind of a trend change lubricant looking stock, I really like the way it looks like it had earnings date 5 days ago, which was right here. And it's pulling back and digging in, and wouldn't you know it, it's using that prior resistance as current support. I'm liking that. I'm liking that. I would like to see this thing continue to move higher, and then of course you've got your void right up here as a possible profit target up here at that level. Okay.
And also, like that's a China internet place, so it's okay. and they're doing China internet's doing really well right now. There's a lot of things I like about that.
AUPH. This one looks like it's kind of a low floater. Let's see how many shares. 29 million. Not that bad. It's had its moments. A lot of gaps. A lot of news. But I'll tell you what. I don't know if I'd want to be a buyer up here. Chances are, just at first glance, there's always a possibility it could maybe want to come back. You could set a pullback alert using the price alerts as a pullback alert for the breakout. That's 1, 2, 3 extended really long days. My experience is the guy that buys up here is going to wind up probably suffering some frustration. So using your price alerts, maybe a nice round $6 figure could be something that could alert you, and you could watch the price action as the trading occurs if that ever. And you're looking for short, I see. Okay, so yeah, it's a tough game. You
don't want to jump in front of that momentum. I mean, 49 million shares traded today on a stock that normally does about 30,000. There's news. That's the
Tim Sykes method. Where you're trying to jump in front of a momentum. I've seen guys make a lot of money, but I've seen them lose a lot of money and blow up accounts before they were right. It's a stubborn type. It's a very stubborn type of trading method. So when I look at this, let's just take a look at the intraday just to see if there's anything there. Looks like it wanted to close strong. I mean, maybe if you really wanted to, you could make a case for setting a price alert to go short, basically right about there, but it's not necessarily one that suits my fancy. I've never been that guy. We call them the perma shorts. They find reasons why these stocks are junk, and they're running and they're getting ready to offer a secondary. The problem is sometimes they go 3 or 4 more days than you can shake a stick at. You guys all recall dry ships. I'm sure there were people back then trying to do the same thing on dry ships back here in these days. So not one of my favorites. I think we got time for one more, and I'll go ahead. Well, we got time for 2 more because I do. AMD is interesting. I like the way AMD is trying to dig in here for the most part. It's been a really nice, strong stock and a strong sector, and we could probably even do a trend line, couldn't we, Andy? I'm thinking we could.
I don't even think it's so strong it never got down there to it.
Come on. By the way, the secret is you got to turn your crosshairs off. Make the trend lines work. Yeah, it didn't get close to.
Couldn't even make it down there.
But that would be something I would be watching if this fails. We had really 1, 2, 3, 4 nice days of down movement. Really nice down movement wick. Probably they took out all the people that put their stop orders below this level, which makes sense, bounce back up. So I'd want to see this level hold. If it doesn't, it's probably going to attack that trend line.
Which would coincide to that $12 range, which you have some nice support there. So.
Yeah. Square, somebody's asking about because it is a trade of the week, and I'm happy to talk about it. We're back kind of in the same thing in no man's land. Our basic stop out is not going to be allowed to get too much farther into this gap down here at 1605, but I like the way the last couple of days the wicks are to the downside and the price action has been bought back up for the most part. So ideally we'd like to see this thing dig in here, but risk management will require us to cut it if it doesn't. Yeah, it will require it to cut it if it doesn't hold that line. All right, so that's all we can do for now. We're going to turn it back over to Scott, and like I said earlier in the broadcast, he's got some coupon codes, some promo codes for people who may want to come in and kick the tires for a month and take advantage of our one-on-one training. So that'll do it for today. Come on in, Scott, and give us some wisdom.
Hey, thanks. Something that we've been trying to get the news out about to everyone that attends our webinars lately is our podcast. We launched it in December and kept it a little bit quiet until February, and now we are growing it. So you can search for the Trade Ideas Podcast. Just search for that, Trade Ideas Podcast, in whatever application you use to listen to podcasts and download them. You should find it there. If you don't find it there, email us and let us know. But I know for sure it's in everything from iTunes to Stitcher, Overcast, iHeartRadio, TuneIn Radio, all those. If you don't see it, let us know, but we sure appreciate it if you found it in your app and subscribed, and that way you'll get a fresh episode this Friday, or you can listen to last week's episode, which was hosted by Jamie and Steve. That was a good one. This week it should be Dan Merkin and Jamie, and Dan should be back again. So just keep an eye out for that. The numbers have been growing, and we're happy about that. We're happy to share all that cool info we're able to relay to you Friday afternoons. There is a discount code today. It's Holly all week. You should see it on your screen momentarily, or you can download a handout. If you go to the handouts panel, click on the little expand next to it, an arrow or a plus, and download the PDF, you get that code. Steve, if you could go to the next slide, or maybe my presentation's frozen. There you go.
There we go. Sorry.
Yeah, no problem. So it's Holly all week, all caps, just like you see it, and that takes 15% off your first month or year, either premium or standard. And remember, the standard version also comes with a full hour of one-on-one training. So go ahead and once you become a member, either by standard or premium, go ahead and go to support, go to training, and find the little widget to schedule your training and pick the best time and date with Steve, Jamie, or Andy. It's a great way to get a head start, and the code is a great way to get started and save. If you have any questions, email us info@trade-ideas.com. That's the best place to send any type of question, because that gets routed through our help desk software to the appropriate team member. You can hit up Steve directly at Steve @ or Jamie is J Hodge @ or Andy Lindloff from today's webinar is Andy @ so we're pretty easy to find. Facebook.com/TradeIdeasPros, where we're located on Facebook. Like our page so you can follow us and then, repost or share some of our content if you find it interesting with your friends there. Steve Gomez is at Today Trader on Twitter. Dan Merkin is at TradeIdeas1. Jamie Hodge is at QuantBot. Thanks all for joining us. Thank you, Andy. Thank you, Steve. And I think it's Dan Merkin and Brad Williams in tomorrow's webinar for the question and answer webinar and demo session. Thanks, Steve. Thanks, Andy. Have a good night.
All right. Sounds good. See you next time.
Thanks, guys. Thanks, everybody.